I love that little 80s riff there.
We're starting
Hello
the
and
dance party
welcome.
early because I got my big shoulders.
I love it.
On today. We also just want to see how widespread our distribution is. Like if this gets taken off of YouTube because of copyright infringement, we'll know we've made it.
That's awesome. I appreciate that. Hello and welcome to the Watson Weekend, your weekly dose of e-commerce zen. We hope to inform. We hope to shock sometimes. I'm your host, Rick Watson, and I'm excited to be back for another week.
Yeah, I'm Jessica Lasewski. We're doing it again, Rick. We're trying to bring a little cheer into some dismal news, a little bit of headlines.
He's back. And look, there was mostly not dismal in Shopify's report, although investors were a little upset at a few things. So we'll talk about that.
There is so much to unpack. And I know that's almost like Christmas come early for you, right? We just came off of holiday, but every time the Shopify group has their earnings, it's always a new day.
Yeah, it's great. I mean, speaking of Christmas, I have a few points from this time in history.
Yeah.
The first teddy bear was produced in America in 1903.
Oh, wow. That's interesting.
What did they do before 1900? Just no teddy bears?
No teddy bears, probably just like pieces of cloth that were sewn to make like some kind of fake doll, I'm guessing. Some kind of like a little lovey. You know, they probably didn't call it lovey then.
The next one, 1950, Walt Disney Cinderella premieres in Boston. My question for you, would they be canceled if they premiered today?
Ooh, Cinderella?
Yes.
Oh, that's a really good question. I don't know. You got the mean sisters, you got the bitchy sisters, you got the bitchy mom, but it would just be refresh. It'd be more like teen style. And then she's just like Snapchatting about her life. It would be a redo.
Yeah.
But it would stand the test of time.
And the biggest one, which is kind of apropos for the show, in 2005, YouTube was founded on today. So.
Oh, that's big.
Congrats to YouTube. It's a monster.
And we appreciate YouTube because it's where we stream and show up. So thank you, YouTube.
Too. Yeah, I mean, look, I mean, this week has been a pretty crazy week. One highlight of my week, there was literally a fire in my building. We did not start it. So don't blame me. Everyone's fine. It's actually a true story.
Yeah, it is crazy. And, you know, we have President's Day coming up. And while it's a banking holiday, I think some of us still in retail get it off. So I'm ready to celebrate some presidents. Thank you, Abe Lincoln, George Washington.
Why do only bankers get off?
I don't know. It's like one of those many perks of, I guess, working at a bank. So you at least get like Columbus Day. You get all of like these core holidays that we still don't know why we celebrate them.
That's hilarious. We have our segment called Headline Hangover. That's how we get our show started around here. First up is the Consumer Product Safety Commission is considering an order to make Amazon count as a distributor.
It's a big change. What does that really mean for them, Rick?
Well, imagine a world where Amazon is responsible for the products on their website.
So like when someone sells a hairdryer and it blows up in some where they've said they've not been liable in the past, they can't be sued. They've now got to take accountability.
100%. Like a normal retailer.
Like a real place.
Yes, like a real actual place, not just like a shill for someplace that sends you somewhere else. Like, oh, if everything's going well, then we're going to make you a subscriber. If everything's not going well, then go talk to the seller.
So that's going to really change the dynamics. And like when we've seen these stats, right, 75% of their sellers are now coming from China. Do you think they're going to take a little bit more consideration?
All the manufacturing still going on in China. I predict those stats are still going to go up.
All right. Okay. So we also have some other news in Amazon's yard, and Shein has established a boots on the ground, if you will, strategically in Bellevue, 10,000 square feet of space for 50 employees. They did say, you know, look, we're the famous term, we're doubling down on it's extremely important. Seattle is, or, you know, the location strategic. We've got 1,500 people now. US is strategically important. Is it coincidence that they're hanging in Amazon's backyard?
Not at all. I mean, I think at this point, Shein is praying for more Amazon layoffs. Like, look, if you don't want to go in the office, you can hang out at Shein.
Yeah, we're here. So Talk is also kind of putting some boots on the ground in the location.
I love it.
So, yeah.
No, that's great. But yeah, we'll see if Shein gets out this year. That would be an interesting one. Incidentally, the former Shein, the next headline is Wish is, it seems like there's a fire sale going on here. There seems to be a fire theme related to the show today, but then
Sure.
Wish, it's getting sold to a site Q10 for a little over $100 million, which is crazy considering they used to be valued over a few $billion. What do you make of this?
I know even in 2020, right? They were 2.5 billion. You know, they had 64 million buyers on the platform. I feel like I have flashbacks when I hear these stories of Temu and Shein taking over the world. It feels very similar and eerily similar to Wish, and how Wish was just going to destroy commerce because of their gamification, and their app was really fun, and you could get all of these cheap goods. What happened to Wish?
Wish, I think, ran out of the cashola. So the challenge is, look, Temu can afford to spend billions of dollars. Wish, not so much. Like, we're a public company, and Context Logic, which I recall was a SPAC. Were they a SPAC? Like, why was Wish called Context Logic? I don't remember that story. Yeah, maybe one of our viewers can help us. By the way, if you're listening in, feel free to comment.
They do wish they were a little bit more relevant. Remember that song? Just didn't have time.
Right.
Maybe later.
What do you have next for us, Jess?
Yeah. So next we have got Instacart has had some news. You know, they're pulling off these kind of normal Silicon Valley tricks. The playbook has been now implemented. We've got layoffs, we've got buybacks, as they're trying to right size what looks like their P&L. So yeah, they made some headlines, and I know you've got a lot of thoughts on this one, Rick.
They had some Super Bowl ads, combination grocery store and football game, which was probably one of the worst ads I've seen in my lifetime. Who wants to be at the grocery store if you're at the football game?
No one.
Unless they're buying beer.
Yeah. In fact, Uber Eats is telling you to do the opposite. You're going to forget things like friends or 10 years of your life because you don't need to go to the store. You need to Uber Eats everything, your groceries, your flowers. Instacart, I think, missed the mark here. But again, they were supposed to take the world by storm. So, you know, what's happening with the brand?
Yeah, I think the brand is struggling to get more name recognition. I mean, this would, you know, especially the advertising, this is a way for them to get noticed. DoorDash continues to be super popular. Most people get their groceries from Walmart. Walmart doesn't show any signs of reducing their share. The highest price grocery segment in the market is bound to lose some share.
True. The Walmart team's digging more footprint, right? It's already going to expand. So probably more pressure to come as people can save some money also. Like, it's not inexpensive to use Instacart. And if you can choose between buy online, pick up, or getting something delivered, is it really that much different? How much time does it ultimately save you to drive 10 minutes to go get your groceries?
That's right. And lastly, in our headline hangover, there's one company out there that has a complicated relationship with zeros, as in they added an extra zero and it was found in an analyst report. And it seemed like these automated trading bots went bananas on it. Their stock went way up and way down, such that they said they expanded margins by 500 basis points.
Ooh.
When the real number was 50.
Oh yeah, those zeros matter, especially when you're talking about margin and how people react to profitability. Yeah, probably need to do some more auditing.
Always forget those annoying details like decimal points. Like those are important.
Yeah, exactly. When you're filling out your TPS report. So I'm guessing that, did they fire their auditors? Like what do you think the conversations were going down in that office?
Yeah. CFO not going to be here very long. That's something that's 100% true. So if there's no consequences to this, then why wouldn't every company just keep fudging their numbers to get a boost in their stock.
It's another thing, just like the whole, I don't know if you saw Dumb Money, just play the market. Like, let's rally. Why not?
Right.
Bada bing,
No,
bada
that's
boom,
awesome.
little boost.
All right.
Yep, we got a lot more to go. So I know that this is really the topic you have all been waiting for. It's the topic Rick has been waiting for. Let's get the drum roll going for Shopify and breaking down the earnings.
No, that's great. Let's start with a recap. In the last week, they reported Q4 2023 and full year 2023 earnings. The revenue growth and margin expansion has been pretty impressive. Just on the revenue side, since they actually cut loose Flexport, which is kind of an interesting topic on its own, they grew 30% year over year if you don't count logistics, which I don't know anyone else reporting like above 20s. And to have Shopify come in and that segment of their revenue is 30% is really impressive. Have you seen anything like that, Jess?
No, I've seen really nothing like that. I mean, we'll talk, I guess, a little bit about the non-public companies in Shein, Temu a little bit later, but like outside of in the public space, they certainly are a standout who is talking about numbers like this, growth like this. But it's a little interesting because Wall Street was somewhat mixed, right?
It was hard to tell exactly what Wall Street was upset about, but if you listen to the tenor of the questions, some of the questions on the earnings call they were disappointed that Shopify was not generating more operating income, even though it expanded. It didn't expand as much as they had guided. To be honest, I could care less about the stock. Usually I just care about what the platforms are doing, how they interact with each other. The stock market is like, it's a fugazi. If you look at the Wolf of Wall Street, like you never know what those things are going to do. But the short story seems to be that Shopify saw some advertising opportunities. They took them and as a result spent more marketing dollars to grow faster than Wall Street wanted to give that money back in margin. So that's kind of what I'm taking from the message.
But isn't this what we've been talking about has been some of their issues? They haven't invested in marketing. They've been very product led. They've kind of wanted to let the software tell the story versus actually investing and getting this enterprise clientele, which they haven't yet fully latched onto. So what's the big deal? Why do you think that the spending was wrong?
Yeah, look, I mean, if you look at one of the things that I think Shopify has needed for a long time is, a CMO. Like the company has no CMO. And I don't know how many days we're on, like years we're on where Shopify doesn't have a CMO, like poor Bobby Morrison. And he and I actually had this conversation where like, we need to get him some marketing help. And so that's what we're about here at the Watson Weekend. We're about helping these companies out. And so if we can lobby for the enterprise team to get some marketing help, most people still don't know that Shopify is trying to sell enterprise software. I think if you look at year over year, their NRF booth traffic was like, 10 times the previous year. But if you ask the average chief digital officer, like, who are the enterprise software platforms? Like Shopify doesn't come to mind.
Let's talk about the Shopify network ecosystem and their competition. So they're clearly doing well. We know they have opportunities in the enterprise. If you're a Shopify competitor, what are you scared of and what do you focus on to combat Shopify in the market?
It's very clear that Shopify is in every room. The question is, are the fish biting at all? And who are they biting? And so enterprise software cycles are notoriously long and laborious, which has kind of usually been the opposite of Shopify's go-to-market strategy. And this is kind of the whole go-to-market organization that they've been building. If you go back to the 90s, Ross Perot said there was a giant sucking sound for US manufacturers going to Mexico. In terms of the platform market, the giant sucking sound is actually from Salesforce to Shopify. And so if you look at like what the analysts were thinking about, they were like, who are you taking share from? Because they don't know the market. They're just trying to look at the numbers. Harley was asked this question. He kind of like sidestepped it, which of course you kind of have to do. He didn't want to call it his competition, but we don't care about that stuff here on the show. They're actually going after Salesforce, and by my estimate, like over 1,000 and probably as many as 2,000 brands on Salesforce are probably in Shopify's crosshairs. And if you kind of look at a lot of these websites, they were put up 5, 10, even 12 years ago, and they haven't changed at all. If Shopify can get these people to move and motivate them, then that's their opportunity.
CEOs don't want to replatform. Like they really, at the end of the day, it's almost in like their pick list of the last things they want to do. So what can Shopify do to make them move? Like, do they have an advantage, or are they in the kind of the same boat as everybody else as they combat the like fears of making that platform change?
Shopify only has a couple of advantages. One is their message is about innovation, how many developers they have, how many features that they're developing. And second is price. You know, they're lower cost than Oracle, they're lower cost than Salesforce. And so those are the messages that Shopify is pushing in the market. But if you run those messages up against like a traditional enterprise IT infrastructure and procurement team, like homie don't play that. They don't care about those things really, because their job is to move slow and prevent change. I mean,
correct. And it's still like a kind of a network effect, right? Like, so if you're Shopify and you're focusing on the enterprise, you really need to be building these very strong relationships at the C-suite. And is that like, that's not normal in their playbook, right? But because of how they've operated within the mid-market, do you think they can do that effectively?
I think Shopify, if you look at anything that Shopify has done over the past decade or more, anytime when someone says Shopify is this and they can't do Y, like whatever those things are, like, oh, they're for entrepreneurs and can't be for small businesses. Oh, they're for small businesses, they can't be for the mid-market. Oh, they're for the mid-market and can't be for enterprise. Shopify has over time really knocked down a lot of those barriers, and to sort of predict that they can't do that in the future would pretty much be betting against history. So whether or not they can do this is really up to enterprise IT departments. And I think it's going to be probably their biggest test as a company over the past decade going into the enterprise space.
All right. So one of my last questions, as you look forward, what does Shopify need to do to just kind of reinforce that they can spend effectively, they can operate well, whether it's investors or just kind of how they're perceived in the market? What does like the next earnings outlook need to say?
Yeah, look, I think what investors are really looking for is kind of one or two things. Number one is like, can we do something in advertising? Because if you look at their software business, it can only grow so fast. They can only increase pricing on the software for so many years, every 3-4 years. And the rest of it is sort of like their payments revenue, which investors already understand. And so investors always like surprises on the upside. And so how would Shopify surprise on the upside? They would find some way to get advertising revenue from their merchants, or they develop Shop app into a channel with maybe through Shop Cash or something like that, that now mid-market and enterprise brands need to be on. And now they have this sort of lock-in effect where this is the only place you can get that, and you're getting the dollars, and it starts to become a flywheel there. So I think that is kind of where Wall Street is looking for Shopify to go. And the fact that I don't think Shopify has gotten that memo yet, but that's kind of what I look for them to go.
Yeah, maybe they'll get there eventually. They got it. Flywheel ecosystem. Maybe they'll get those like tattooed, and they'll start actually working on them. So we have not played Two Truths and a Lie in a little bit. We thought we'd try a new game instead. This week is February 13th. Going to have a decree. So we're going to have you go head to head with Mr. Beast in a little rock, paper, scissors action. You ready to go?
All right. Yes, let's do it.
We're going to go a little rock, paper, scissors. You go first.
All right.
Right?
Here we go.
Oh, paper. All right.
I'm paper.
Oh, if he goes scissors, what's going to happen? All right. Mr. Beast is up. Oh, you chose poorly.
Oh, no.
And Rick never loses. This is bad news.
Shopify loves to talk about all the list of enterprise brands on this platform, and they always seem to mention that Mr. Beast is an enterprise brand. I always thought, like, I don't know, Nike was an enterprise brand. But apparently a random YouTuber, even if they're very popular, is an enterprise brand.
Look, definitions can be what they want, right? It's like potato, potato, tomato, tomato. You call it as you see it. Remember when we were at Channel Advisor, our definition, we called enterprise brands those that have like 30 million in online sales. So it's what you make it.
Nice blast from the past. I wasn't expecting that.
I mean, it was 2004, but hey, it's all right. We're going to go to what probably would be classified as an enterprise brand. And we got a Temu Shein head to head of like what's happening in the world of these, overseas Chinese retailers coming into the US and really taking it by storm. There's so much happening. And I think we want to unpack what's going on. Like, do they have a strategy? What do you think? What is the strategy between these guys?
Look, I think the strategy is keep pushing down the market and to eat up. And so the more people they can get into those apps, the better chance they have. There's a reason that Amazon started in books and then expanded into every other category so that it can grab more and more share of wallet. So right now we're in the land grab mode for Shein and Temu. I had some interesting stats for Temu. They spent $1.7 billion in marketing in 2023. In Q4, they were the 5th largest spender in paid media. You want to guess who number 1 is? Amazon. There you go, of course. And it's projected that they can more than 50% grow their paid media spend in 2024, up to $3 billion. And JP Morgan, which could be high in these stats. I don't know. I mean, speaking of two truths and a lie, JP Morgan estimates that Temu will be profitable in 2027.
Oh, can they hang on that long? That's my question. I mean, yeah, $6 items. Something else I thought that was interesting is there's also this combative headline. Maybe it's a little bit clickbait that said, Temu's sales are softening, they're losing their steam, and they were citing some like month-over-month growth slowness in December and then January. Well, let's kind of like break that down. When an item is shipping from China and it takes 6 to 20 days, you're immediately cutting off the delivery time of when you're going to get something for Christmas. So of course their sales slowed because it's coming on the slow boat and it's not going to make it in time for the holidays. So yeah, December was probably weaker for them than it was in other retailers.
By the way, you're losing the main point is like, who's giving their like bestie like a 50-cent item from Temu?
Apparently a lot of people. Boomers love Temu, and it's probably because of where they advertise. They're on the book, right? Because we dropped the thanks, Sean Parker. So we're on Facebook. They get the ad and they're like, huh, yeah, this looks great. 50-cent hairbrush. Why not?
I'm used to having Amazon boxes under my Christmas tree. But if someone put a Temu box under my tree, I would not look forward to opening that. Not.
So you unfriend them? They're automatically off?
100%.
The fake dogs are really, I wanted to see what happens. Like, and that's a whole other thing. When you talk about what's being sold on these platforms, a lot of it are very similar versions of the brands that we know today. And it comes down to like, we also see those brands being very coveted. Do people just not care in the Temu environment? Is this where people go to? Is this like the new version of I'm shopping, maybe off brand and like instead of Walmart or off brand on Amazon, I'm going off brand on Temu? Like, do you think they're going to start taking that share?
It's the world's biggest dollar store. Let's be honest. So when you walk into a dollar store, you are not looking for brands. And if you find a brand, it's a brand that you knew 20 years ago. So like, wow, thanks, Grandma, for the Magnavox headphones. I wanted Bose.
Yeah. Or the Irish Spring soap instead of the native or
Wow. Again, with the Irish.
It's a thing. Well, St. Patrick's Day is coming up. So I don't know. That's like the next big holiday. So the other thing we talked about is Shein. Shein is a little bit of a different story. Shein really got their start in, well, first it was like a whole different space in looking at wedding. Then they've gone into apparel very heavily. They're expected to be around 30 billion, maybe 35. I think the last stated insight on what their revenue was a Wall Street Journal article, and it was somewhere in like the 20 billion. So they feel like with a 40% growth this year, we're probably at 30. It's a hate-hate relationship. Lawsuits. What do you think Shein's better positioned to win?
I think Shein is better positioned to go up market than Temu. Temu seems to like, you can't go lower than me ever. And suing, the things that they're suing Shein for is like a supplier gets kicked off of the Shein platform, and Temu's like, we have no standards here. Come on up. We welcome you. People used to get kicked off of Amazon, and then they would go to like, I don't know, Gold's auction or like some crazy site. They're still allowed over here. I think this is the Shein Temu dynamic. But Shein has done some pretty legit things in the space. They have made a big investment into Spark, which is owned by Authentic Brands Group, which is the biggest licensing company in the world. And they're a third owner of Spark Group, which, by the way, includes the owners of Forever 21, right, which now sort of like, Shein has a shop and Forever 21. My question is like, how long before that flips? Like, Forever 21 has a shop and shop within the Temu or the Shein store.
I think it is in the not too distant future. It is the place like you go, you get your dress for the club when you were in college, at least for me. I didn't care if it was shredded by the end of the night because it costs about.
By the way, we're getting like a confession here, just so you know, on the Watson Weekend.
Yeah, a little bit. It's okay. I think my fellow people feel that. So, it didn't matter. And I think that is really where we're going with this TikTok audience. Shein works very closely with influencers. There's heavy drops. They do these unboxing events where they've got hundreds of items that they just roll through, and Forever 21 just can't compete with that. So I agree with you. I think they are going to utilize this footprint to put a stake in the ground of that brick and mortar presence that'll differentiate them. It'll get goods closer to the customer faster and really enable them to continue to grow and scale. I wonder how long, not only will it stay apparel, but will they take advantage of the marketplace where they've expanded in some of these other categories? You talked about what Amazon did. Shein's doing the same thing. They're going into other types of categories, health and beauty, a nice adjacency. So yeah, just kind of curious, like how long do you think that before that happens, Rick?
Yeah, look, it's happening. We haven't seen a lot of success with it yet, but both sites have announced marketplaces, Shein a little bit before Temu. And so I think this is going to be a big part of their strategy, category expansion. I think, beauty is an obvious one, but I don't see a category that they won't try to go in. I mean, look, if you go to the Temu website, try to name me a category that they're not in. And so it's a little bit scary. My big question, and I think this is maybe one I would love the audience opinion, and we can spend some time talking about it, is if you're a traditional retailer, what is your response to Shein and Temu? Like, if you're a brand, if you're a retailer, and you're in multiple different categories or in one segment of the market, do you chase them? Do you down? Do you go up? I think that's the question that's on everyone's mind.
Where does that put you in terms of who you compete with, right? So I think we have seen retailers like Macy's launching new private label. Target announced a inexpensive product line that I think more closely mirrors what they're trying to do to combat Walmart than maybe a Shein or a Temu. But the emphasis is still there. To your point, you've got to make a choice and decide where you want to go. The race to the bottom is going to be really tough for people if you're going to take something that is maybe higher margin, higher ASP, and have your customers start trading down. It's very risky.
Yeah, I mean, I think there's two big no-nos. One is like trying to chase down market is certainly an issue. I think Amazon is trying somewhat the opposite approach, knowing that they have a big exposure to the number of Chinese sellers on the market. They're trying to reduce their cost to serve such that if Shein and Temu start going up market, Amazon is able to defend that a little better and continuing to like serve their customers better. Target is taking a little bit that you mentioned their new private label line. It was actually introduced this week called Dealworthy. The press release was very curious. It says like, we have some items that are under $1, up to $10, only 400 items, which seems like a very small number. And now Target or Target is going to become Tarmu. Is that the new situation?
Did we met Tarmu? Oh, there he is.
Yeah. So the Watson Weekly, we try to stay on top of all the trends. I mean, we actually did a mashup of Target and Temu for everyone. And so we would love to have your opinion of these things. What's the story here? And how do you think this new line is going to go for Target?
People have always shopped the dollar section at Target. It's just been less than 400 items, right? And it's typically at the front of the store, and you add some things to your bag, and it's usually seasonal. It changes over very quickly. You can get a great coloring book for your kid. You can get some nice little cheap holiday items. So I am curious because they've always had value lines, right, in different ways. But now they're really putting the stake in the ground. The value lines were never in this low of a price range, this $1 to $10. And I know that they are trying to get those shoppers they lost that went to Walmart back into the store. I just don't know that this is enough to really change that trajectory in a meaningful way.
To get people back into the stores, they need to keep winning in replenishables. That's definitely somewhere where Walmart has them beat, because you have grocery going there. And so it's not clear this Dealworthy line will do that. I do think it's more of an impulse thing. Like, oh, it's an extra when you go there. Is it going to get you walking into the store? Which again, I think that's a big challenge here. And, you know, it's like Target chasing the market down. How did they, I would very curious how their merchandising team decided the assortment there. Did they just like walk down to the Dollar Tree, buy a bunch of random stuff and just sort of stock the shelves, or like watch what's sold?
I don't know. They do have so much analytics and data. And I have to imagine there was a lot of thought that went into this and ultimately what they decided to invest in. And it has to be things that are those like expansions of the grab, to your point, you add the things in, or it's, hey, there's some of these areas we're not really winning in. We think if we introduce this, a couple of items in these lower price points, we will be able to get people into the store. I think to your point, especially when now we're busy, the Instacarts are probably a nice to have versus a must have. And so I'm cutting that out of my budget. Do I go to a Walmart where I probably have a lot more selection to choose from, or and lower prices, or do I go into a Target? And that's really what people are choosing between. Like, they don't have the time nor the cash to do the multiple shops anymore. And so I think that's really where some of the challenges are with Target and trying to figure it out.
Everyone who is trying to figure out what to do about Shein and Temu, it's really a proxy for a different question. It's like, what's going to happen with the consumer economy, and what's going to motivate consumers to do what they do? And, you know, coincidentally, on the Watson Weekend, we actually have the best analyst on the planet for what's going on with the economy, and our own Jess Lasewski.
Oh, thanks. You know, this is like a segment near and dear to my heart. And I do feel like you talked about teddy bears. We are in some bad news bears territory here. We had a lot of data coming out about the market. We had the CPI index, which some people are probably like, why do you even give a shit about the CPI index? We're going to tell you. We had retail sales come out for January. And then we had a very bold statement from some Nostradamus-like economist on whether or not we're going to have this hard or soft landing. So we're going to dive right in. And first, we're going to hit the CPI index. And why we care is because the CPI measures the changes in the prices paid by consumers for everyday goods and services. And why it matters is because you want to track the impact of real world inflation on the economy and what people are spending. And the report was just different in a bleaker way than what people thought, because it was higher in terms of where goods stayed or services stayed, and primarily shelter. And shelter makes up a third of the overall CPI index calculation. And that shelter rate is very stubborn. It is just sticking. It's not coming down. We're not seeing anything, materially change in terms of the mortgage rate decreases. And so that was kind of one of the ahas. The forecast was going to be a 0.2% increase in an annual gain of 2.9. And you can see here, it was a 0.3% increase from a month over month perspective. And if you look at all items, it's 3.9. And if you take out food and energy, it's 3.1. And the reality is things are just still very expensive. Like you get down to food, although there was a little bit less pressure, it's still like $6.80 for a pound of bacon. That's a lot. And it puts a lot of pressure on the consumers. So shelter rose 0.6% on the month. We also had some food prices that were going up, but also restaurants. So we're continuing to see that inflation hitting in some of these other services areas. Gas prices were lower, so that's a win. Probably not going to be a topic in the election unless something changes with the Middle East and the dynamics there. But gas coming down. But the reality is it was just still a disappointing report for what people felt like could be an early indicator of some improvement in the inflation.
I mean, the price of bacon, it sounds like it's going to make everyone shelter in place. Look, I thought at the end of last year, everyone thought the Fed was going to start reducing rates early. And it just seemed like that was optimistic and hopeful. And now that kind of the economy is playing out, the Fed is happy to keep things longer. The jobs reports have been kind of too good for them to lower rates, which will keep mortgage rates high, which will keep people in their current homes. I did see one data point in the last week that said that something like over half of homes were owned by those over 65. And there's some thoughts that these empty nesters will now start to sell their homes, which will increase supply, which could, in some of these sort of overbought areas like the Sun Belt, really start to reduce prices in those areas. So that's something I'm looking out for.
Yeah, that's actually interesting. And I do have an update too when we talk about mortgages and just also the disparate scenarios that are happening in like low income versus higher income. So we're gonna hit that for sure. So let's go to retail sales, because that was another one that the headlines were really negative, right? They were bad in January, but let's just be honest with ourselves. Retail sales are always bad in January.
Not good.
I have some data for you. You have in 2017, it was down 21.9%, 2018 down 20%, 2019 down 18%, 2020 down 18%. So January being down 16.2%, and this is coming off of December. Yes, it was bad news. And if you look at this bar, it's seasonally adjusted versus not seasonally adjusted. The low points of the years are always January. So the high points always December. Yes, it wasn't good news, wasn't great news, but we kind of expected this. And I was surprised to see such a negative reaction, given we knew people blew it out in December. We knew January was going to be tough, and January is just a tough month anyway. People are returning like crazy. Maybe they didn't spend their gift cards. We talked about gift cards last time, but yeah, I felt like really when I was reading these headlines and the reaction, I don't know. How did you feel?
Yeah, January is it's the worst retail month of the year because consumers just blew out their budgets. Yeah. And so the only people that are spending more are all the people who forgot they ordered on Temu and were waiting an extra 15 days. And you're like, oh, it's Christmas in January because it was on a slow boat.
That is also interesting though. Dry January must not have been that dry. So either people are drinking their woes, but the sales rose actually 0.7%, better than what we saw in retail sales. For people going to restaurants and drinking and eating. So maybe dry January wasn't a thing. It was only me that did the pain and suffering. So I thought that was interesting. And we got one more slide on e-com, since we know so many of you guys follow that. We follow that really closely. And this is just what e-com delivered. So it's interesting because if you look at e-com and auto sales. That really represents a bulk of what we talk about in retail and in the sales. And it delivered 115 billion in sales. And like I said, and you agreed, like it was, yeah, these are the worst months, especially for e-com or non brick and mortar. So I think we just kind of have to give it a little bit more time.
One of the things that we also saw in January was like horrible weather. I mean, some of the worst weather we've ever seen, rainstorms, epic snowstorms across the country. And so a lot of retailers I talked to blame their performance on the weather.
Yeah.
Because, I guess maybe it makes you click less.
Your fingers are cold. You need those fingerless gloves from Temu. Yes, the fingerless gloves, so you got your hand warm, get your circulation flowing. I guess, yes, they are clicking less, or they're just out less. They're not shopping. We got one more story here in the happiness index, which is kind of the womp womp index. And if you guys know Lana Del Rey's got the summertime sadness, that's really the report that we got. There was Torsten, who is from Apollo, the chief economist there. We had the head economist at Citi saying, essentially, brace yourselves. We are forecasting a recession in the middle of 2024. And this is why. Yes, things are good. Jobs report is good, to your point, Rick. People were still spending. We're on this high of 2023. We're all feeling good, like the consumer is resilient. But when you peel it back, we've got weakness in the labor market because the jobs report was good. It's actually the workers are having less hours in a work week. And what you're seeing is like the restaurants and more of those kind of side hustle type industries have stalled on hiring, which isn't good, right? And that's a problem. We saw what happened in the like 2020 like pandemic when we didn't have restaurants hiring, the impact that had on the economy, which fueled some of the stimulus money. We also have credit card delinquency issues. So 1 in every 12 credit card holders are missing their payments. So we talked about this for a while. It's hit. We just talked about inflation. It still remains too high. The January retail sales report that's actually put, I think, the analyst and economist on notice that it doesn't feel like that soft landing is a reality.
Japan just entered a recession.
It did.
The United Kingdom just entered a recession. How long can the U.S. hold out here? And is it more realistic that the U.S. might enter a recession in the second half of this year?
I was going to share this news, which again is a little bit rough. The New York Fed report has also been analyzing delinquency rates. And the challenge that we have is in these lower income consumers and, in the economy, they didn't take advantage of remortgaging when rates were low. People, who maybe were more affluent, higher income, took advantage of those lower rates. They remortgaged. They might probably have a little bit more cash. 57% of households are rent burden in low income areas compared to 44% in high income areas. And households are defined as rent burden if they pay more than 30% of their income on rent. 24% of mortgages in low income areas were refinanced compared to 42% of mortgages. And that's in 2020, dealing with a larger portion of the economy that's feeling this inflationary pressure, maybe also feeling the job pressure, layoffs, that also just have a lot of debt that they're carrying. I think a rough go as we look forward in the future.
It exacerbates kind of the good news, bad news economy from people sort of have stable jobs, have done smarter financial moves early on versus people who maybe didn't have the resources to do that. They're going to be feeling more squeezed, which means that kind of your higher income shoppers are going to propel the whole economy. Because of high inflation, they're going to get squeezed down too.
Which goes to the trade down and probably why Walmart is successful. We go back to that in attracting these shoppers, or Shein is attracting these shoppers. Temu's attracting these shoppers. I forgot about Tarmu. So he's back. This is like such cloudy news. What are we going to do?
I don't know. Maybe we can dance with the monster here a little bit, but we're happy here. We can start the dance party.
All right.
I'm excited.
How was Tarmu?